to present the budget of the Union for the year 2015-16. The government has decided to continue to supporting important national priorities such as agriculture, education, health, Manrega, rural infrastructure, including roads program targeted for the poor and underprivileged, which will be all continued by us. The current account deficit for the year is expected to be below 1.3% of GDP. The real GDP growth is expected to accelerate to 7.4%.
Om Sarve Bhavantu Sukhina, Sarve Santu Niramaya, Sarve Bhadrani Pashyantu, Ma Kasit Dukh Bhag Bhavet. With these words, Madam, I commend the budget to this Honourable House.
Hello and welcome. You're watching our special edition of Money, 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 the Budget Special. Unlike the expectations, the budget did not overwhelm with any big reforms, but experts are calling it directionally positive. Individual taxpayers did get a leg up, though, in the form of higher exemption on NPS, medical insurance premium, and a larger transport allowance. But the all-important tax slab changes were missing. Despite that, if the last budget and this are seen in toto, an individual's income up to almost 7 lakh rupees becomes tax-free, given that they utilize the maximum tax savings, including the interest exemption on home loans. So does life change materially for people like you and me? Well, that's the question that I'll be asking our panelists. Nimesh Shah, MD and CEO, ICICI Prudential AMC, Perizad Sirwala, Partner, Personal Taxation at KPMG, and Pankaj Matpal, who's a Certified Financial Planner and Director at Optima Money Managers, join in. Thanks very much to all of you for joining in today. I know it must be a very, very busy day for all of you. But Nimesh, let me begin with you. What are your first thoughts on how the budget was and what will it mean for your investors?
I find the budget very, very credible in terms of the way the numbers have been projected. I find after a long time, I have always felt that the numbers have always been over projected. The revenue numbers, the assumptions of various governments earlier have been very, very optimistic. This time what you see a very realistic numbers on the revenue part. So what the government has put down as numbers, I think 1 year down the line when I come into this studio, each of that line by line numbers would be looks like very achievable numbers. So we won't get surprises. When the finance minister says a fiscal deficit of 3.9%, I believe there is a very clear plan to achieve that, both from the revenue side as well as from the expense. So one is, it is a very credible budget. Second thing is, directionally, we are, as you mentioned in your one, directionally, there are no surprises. Like what views I had yesterday or today morning to what views I have in the evening, there is no dramatic change. There is no surprise in the budget. There is no industry view change except, say, cigarette industry, which I would say we are negative for what we were 12 hours back. There is no industry where my view has changed since morning. So it is when there are no surprises, when the numbers are credible, and I believe it's a very, very budget in a positive direction. Okay, so the only takeaway then is that your investors should smoke less, perhaps. Investors should smoke less, and there are other takeaways. Investors should invest more in infrastructure funds. That's what. Either infrastructure companies or investors can invest more in infrastructure funds. Banking with the SURFACE that has been given to NBFCs. So banking and NBFCs looks like a good sector that one can keep on investing in. So there are positives for the investor which we can discuss. For sure. But Perizad, I know when we spoke earlier, you had indicated that the tax slab changes is what you were really expecting, that they should be brought up to international standards. Are you disappointed that it hasn't come through, and is that comparison even fair?
So one has to actually, bear cognizance of the fact that last 9 months, when the earlier budget was introduced in around June 2014, there was already a slab rate change of 50,000 rupees last year. So perhaps 9 months was too soon to, tweak the slab rates, which impacts majority of the taxpayers. If you see the numbers, and as Nimesh mentioned, there's also this, difficult task of balancing the fiscal deficit. So perhaps while expecting expectations of the common man is always there. I think perhaps as I read it now, it was a little too soon. Keeping in mind, and I would agree with Nimesh to say that there are very definite roadmaps and, statistics in this current budget, which clearly lays down what he intends to do, when, and what is the revenue loss or the gain to the exchequer. If I look at some of the advanced countries, this super rich tax which is brought in, surcharge additional incremental of 2%, which is brought in this budget, is more or less on the lines, at least I'm aware of one country which is UK, which also taxes it. Having said that, definitely the slab amounts which are chargeable to tax in some of the other countries are fairly higher as compared to our Indian tax regime.
Okay, fair enough. But my question to you, Pankaj, is that, while they've tried to defend why the finance minister did not change the tax slabs, what he liked to call it was that he doesn't want to create a consumption society in one of his interviews. At the same time, he's gone ahead and incentivized the use of debit cards and credit cards. Now, while I understand it is to rein in this use of black money, but won't it eventually, give rise to that vicious circle of consumption?
That is true, but then that is up to people whether they want to use for their need or want. That is always there. But otherwise, also from personal finance point of view, I'll say that there are more expectations than this from this budget, which could not be met. Because this budget is going to affect your household budget. That is the most important thing. Increase in service tax from 12.36 to 14%, because for income tax there is basic exempt limit. Not everybody pays tax. But if you talk about service tax, every poor or rich has to pay service tax on some services. For example, your credit card bill, your electricity bill, your phone bill, on some or other services you are going to pay service tax. So that is why your cash flow will get disturbed.
Yeah, fair enough. Actually, that's a good point. But Nimesh, what did you make of this gold monetization scheme, the introduction of gold bonds? How is it going to work and how is it going to help investors?
I think gold is a very interesting thing. If there is a reality that Indians love gold, right? So how we cannot control Indians, and it is not productive for the country that Indians are holding gold. So this is the best thing that he could have done. What he has done, there are two things. If I remove the third part also, there are three things that they have done. First thing, if you have got gold in your house, right, please come to the government will come out with a scheme whereby that gold you can put it with the government and you will be able to earn some return. So gold which is lying under the pillows of people or in their lockers can come out, and it can be on that you will get some kind of return. Government is planning to come out with a scheme. Second thing is our obsession of investing in gold. We believe that to a certain extent Indians use gold as a hedge against inflation, right? A hedge against forex, a hedge against inflation somewhere. So if you want to invest in gold, instead of buying physical gold, just buy gold bonds. That's what is done internationally. You buy gold bonds. If the price of gold increases by 7%, then you get the gain of 7%. So there is no need to take a physical gold and put it in the locker. You can just straight away buy gold bonds. That's a very, very positive thing. And somebody say on our festivals and all, we want pure gold and keep that small coin or bar in our houses. That also government has understood that reality, and instead of importing it from outside, government will supply that gold. So all three things is a step in, especially the first two. We can monetize our gold. The gold can be used in the country rather than being stashed away in a locker.
Yeah, so that's good from actually a policy.
From the investor's point of view.
Yeah, policy point of view. But you know how we love our gold. We want to see it. We want to be, wear it. Want it to be in our locker.
If you want to wear it, that's a different issue. But the gold which is getting locked in coins and bars, which is quite a huge amount of gold, that can be used. That can be given to the government, and government can create a pool out of it.
All right. On that note, let's take a very quick break. We'll come back in just a bit. When we return, we'll talk about how your bank investments will be affected, or rather your bank savings will be affected come the 1st of April. Stay tuned.